been putting all my people on. Ain't no telling where these profits taking us.
Hey, what's going on, everybody? It's Mr. Kingdom Cash, Charles Dyson here, back with another video for you guys. And in this video, I'm going to talk about one of the most underrated subjects when it comes to Forex trading. I'm actually going to talk about how to identify a trend, right? And I'm actually going to give you a little bit more than just how to identify a trend. I'm going to break down the full context of how you need to view the market in order to understand what you need to do to execute, right? And if you follow the principles that I share in this video, I think it could take your trading to a whole new level. Now, I got to give you a disclaimer. I do not trade this way anymore. What I'm about to explain to you, it works, but I have a much easier way that I actually trade and that I actually show my students how to trade. And if you want to see some of the results they produced, and I suggest you check the description box of this video, right? But all in all, this information is very powerful, and if you apply it to trading, it will, I believe that it will take you to another level, right? So the beautiful part about what I'm about to show you is it can be applied. It's actually teaching you how to read a chart. So I believe once you understand the fundamentals of how to read a chart, then trading becomes way easier because you know what you're looking at, right? So I'm actually going to use a naked chart, right? Nothing on it, no indicators, no nothing, and I'm going to show you the easy way to, number one, identify a trend, but number two, how to maximize that trend and benefit from it, and then how to how to recognize a change in trend, right? So okay, I don't need to be buying anymore. I need to be looking for sells, right? Or I don't need to be selling anymore. I need to be looking for buys. So that's one of the most important things about trading. The reason why most traders struggle is because they don't even know which way they should be trading, which is kind of the point, right? So if you don't even know if you should be buying and selling, then that's why you're having a lot of trouble being consistently profitable. I'm going to show you how to build a bias, a directional bias in this video as well. All right, but let's get right to it. So the market moves like this, okay? It moves in waves. It never goes in a straight line where it wants to go, okay? It moves like this, all right? And then sometimes, right, or I can even, sometimes the market will do this, which is called consolidation, where it moves back and forth between a range. And then once it figures out what it wants to do, it might break out to the upside and continue in that pattern, or the market can break to the downside and start a new pattern, right? That moves down. Same exact pattern. So there's only three ways that the market moves. It either moves in an uptrend, all right? It moves sideways, which is called consolidation, right? Or it can move in a downtrend, right? But the most important part of understanding how the market moves is knowing when to enter, okay, and also when it's time to exit. So let's talk about entries first. So since we know that the market moves like this, all right, here at the end of consolidation and the beginning of the continuation, right, is the most opportune time to enter the trade, okay? Now, this isn't, this isn't revelational knowledge, right? This isn't too heavy, right, or too difficult to understand, all right? But here's what you got to understand. This is what most people learn, okay? That you want to get in the market, like I said, at the most opportune time, at the end of consolidation, the beginning of continuation, right? As this is happening, right? As this is happening, the market is creating highs. The market is creating highs as this is happening, right? So, and this would be the lowest low right here. We'll mark this in blue. Okay, this is, oops, unlock that. This right here will be the lowest low, right? Now, what many people don't know about this particular method of looking or viewing the market is there's no written rule, right? Well, before I even give you that, let me explain this. All right, so you see how market created a high, created a low, created a higher high, created a higher low, right? But this higher low right here is support, over here is resistance, right? And this is what most people learn. The reason why your stop loss is getting hit when you're trying to trade this way is because what most people don't teach is there's no written rule that says this area right here, the market must come to this resistance, or excuse me, must come to this support that was previous resistance, and the market must turn around here and continue up, right? And people who trade Fibonacci understand this. I don't particularly trade Fibonacci, but I love Fibonacci, right? But I keep things simple, so I don't use it, right? But watch this. It's a much easier way to trade, trust me. What most people don't understand about this, right, is that there's no rule that says the market has to stop here. So what most people do is they're putting their stop loss below this area. Okay, this red line represents stop loss, right? Or, below this area. And they're buying the market right here in this area right here. Let's call it a zone. They're buying the market right here in this zone, somewhere in this area. And what the market makers know is that people all over the world trade like this. There's a lot of liquidity. There's a lot of people that have stop losses right below this area. And the reason why, if you're watching this video right now, your stop losses are getting hit is because nobody told you that this whole entire zone right here, this can retrace all the way. We'll leave this here. The market can retrace all the way down to the bottom of the previous low. The previous low. Like I said, there's no rule that says it has to go here. So if you're putting your stop losses below this area right here, that's why your stop loss is constantly getting hit. See, if you understood that this whole entire zone, right, is a potential entry area, and you moved your stop loss below this last low, guess what? You give yourself a significantly higher chance of catching this buy in this uptrend. Okay? It's a way different way of viewing the market, isn't it? Right? That explains a lot. It explains why your stop loss is constantly getting hit. Right? Now watch this. The market goes up here. It breaks the last high, right, that it created. It goes up, creates a new high, comes down, right, tests the new last high, right, the last high, tests the last high, creates a new low. But once again, what most people do, they put their stop loss here, try to catch the trade up, not understanding, right, that this whole area is the buy zone. So this whole area is the buy zone, right? You can buy from here all the way back down here. right? And your stop loss should go not below this low, but below this low, right? Giving you ample opportunity, ample room for this market to do whatever it wants to do. It can come down here, right? It can come here and then reverse up. It can come back here and then reverse up. It can come even below that area and then reverse up, right? Right? But that, like I said, if you understand anything about Fibonacci, you understand why this can stretch all the way back to this area right here, right? But this is not a Fibonacci video, so I won't even get into that, right? But this whole area is a buy zone, right? And the reason why your stop losses are getting hit is because the masses are putting their stop losses right below this area, right? Happens a lot, okay? So that's how we view uptrend. Now, let's view downtrend, okay? Same principle. This is a downtrend. So, it's the same principle. When the market is going down, it's creating highs, okay? Highs, all right? And then it's coming down some more, creating another high. Coming down some more, creating another high, right? And this represents the most opportune time to get in the market, or so we've been taught. Okay, right? But when it's coming down here and creating these new higher lows, if we just slide that bad boy this way, this is resistance, this is support. Same thing over here. This is resistance, this is support. Okay? And what people are being taught, once again, is the market will come back to this previous support, create resistance, and this would be your buy zone. That's what many people are being taught. And then your stop loss goes here, right? And you're peachy. You're gonna make money because you're selling in this particular zone. Not understanding that that's not the true zone. The true sell zone is this entire area, because the market can come here and drop. The market can come anywhere in this area and drop, right? It's not just about this particular support resistance area. It can come all the way back as far as here. It could even throw a wick all the way up here and then drop and continue going down. But if you're putting your stop loss here, 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 right, in this area, in this zone, that's why the market is throwing wicks, knocking you out, and it seems like the market is just picking on you and dropping and giving everybody else the money you should have been making, right? But you got wicked out of the trade. You just didn't have the right understanding, right? Which is what I'm giving you right now. What has been your biggest day trading thus far?
Man, my biggest day trading so far has been a little over $2,400, man, in a day.
Went from about $1,000 to about $5,800 in 2 days. And then this most recent one I got right now started at $565, and right now we're at about $4,500.
I flipped $400 to $2,200. Put it like that.
Jeez.
In a couple hours.
My biggest trading week was 17,000 US dollars.
How long did it take to make
that? 3 days.
My biggest day trading actually was last week. I put up over $1,100 in one day, and the week I ended off with about $1,500.
Tell me what your first impressions were from when you did the training, when you first learned Skittles.
Well, like when I first learned it, I had to keep looking at it. I was like, no, this is just too simple. This is like, again, just talking to myself, like, okay, because I'm already like not really like computer savvy. So once I got to the Skittles strategy, the first video, I'm like, oh wait, I gotta take notes for this. I was like, no way, this is easy. But like at the end of it, I was just like, all right, like if this is all I have to do. Now I get what Salita was saying, 1, 2, 3, take the trade.
You just saw the amazing results, ladies and gentlemen. I'm looking for more people around the world to serve. It doesn't matter where you are. I'm looking for people to help become successful through the reality of making money from a phone and making money while you sleep. And I got some tags on the screen right now, multiple ways to contact me. If you reach out, I'll be willing to show you exactly how this works. I'll be willing to accept you into my private community, and I'm gonna serve you and teach you how to multiply money from your phone exactly like you saw the results of the other people just a moment ago. So ladies and gentlemen, I can't wait to serve you. I'm accessible. You can check my Instagram stories, my YouTube stories, and you'll see when my next live presentation will be. I want you to come hear it for yourself. Ladies and gentlemen, one message can change everything. Can't wait to talk to you and help you understand how you can change your life. Talk to you soon.
Okay, so same thing applies in this zone. Same exact thing. The market comes here, creates a support, comes here, creates a resistance, breaks that previous support, right? Creates a new low, comes back up, creates a high, right? Lower high, and then that becomes the resistance area. And this is where people are being trained to sell. You get the picture, right? So here's what I want to show you. Now let's look on the chart. I'm on GBP USD. Okay. GBP USD. Okay. We're going to look at this. Right. It's clear uptrend. Now I should discuss this as well. Let me just show you this. Let me see how I'm going to teach this. All right. So this is an uptrend. How do I know? Because let's just look. Where's the highest point in this frame? Right here. Where's the lowest point in this frame? Right here. And all we got to do is connect these two dots. And we see the market has been, this has been an uptrend, right? But it didn't move in a straight line, right? Just like I just showed you. What did the market do? What did the market do the whole entire way up? Right? Overall, it went up. Overall, and down, and up, and down, and up, and down, right? Up, down, up, down, up, down, up, down, up, down. So it didn't just move in a straight line. The market was going back and forth overall, right? And it wasn't even moving straight like that. It didn't go straight down. It went down, up, down, up, down, up, down, up, all the way here. Then it reversed and went up, down, up, down, up, down, up, down, right? So that's what the market does. And when you're trading, the market's job, or the market makers, what they're trying to do is confuse you. They're trying to get you to doubt your trades. They're trying to get you to second guess what you're doing, right? Because when they create confusion, they create, people who are inexperienced, don't know what they're doing, hopping in and out of trades and taking losses, right? So that's what the market is designed to do. And when you understand that, you know how to trade it. But anyway, let's go over exactly what we just touched on. So let's just look at this space right here. What did the market do? Okay, same thing. It's an uptrend. Market came up, created a high, right? Oops. Created a high, okay? And it didn't just break it. It retested this high over and over again, right? And then finally it broke it. Then came down and created a low. Now remember, or I shouldn't say remember, let me tell you this. When I put these straight lines on the chart, I want you to think of this as a zone itself. So the market doesn't have to come all the way down and touch this line. See this wick right here? This is a zone. Okay? It's a zone, right? And guess what? The market came and touched right where this wick got thrown up and came back down because it rejected. Guess what? The market threw a wick down at that same exact spot, rejected, and went back up. So that qualifies as what I was explaining. But to keep the chart clean, I'll just use these lines, right? But when I put these lines, I want you to think of this as a zone. Okay, that's important to understand. Then the market does what? It breaks that high, comes down and tests that zone. That previous high became support. Previous resistance became support. Now this becomes the new high, right? And guess what happened? Guess what happened? The market came, tested it, threw a wick all the way back down to this area, right? All the way back down, right? And to make sure you can see this clearly, I'll put the third one right here. And I'm going to just draw this out. Okay? So we got move up, move down, okay? Move up, right? What did I say people are taught? What did I say people are taught? That when the market retraces, this is the most, oops, pushed the wrong thing. What did I just teach you guys? That people are taught this is the most opportune area to buy, and their stop loss goes where? Below that area. And what did the market do? It did not test this area and just keep going up. It came down where? Into exactly what I just explained to you guys. The zone. This whole entire area is a zone, right? This whole entire area is a zone. It's a buy zone, but you're putting your stop loss in the buy zone. That's why a lot of people lose. Stop loss should go where? Below the last low, right? And guess what? If you were trading like that, look how much room you gave the market to play, right? And come nowhere near your stop loss. Why? Because you weren't putting your stop loss in the buy zone, right? That's exactly what I just explained. But now you're seeing it with the candles on the chart, right? But there's more. Don't click off the video. Watch this all the way through. This is going to be very valuable to you, okay? I'm giving it away for free, right? And like I said, I don't even trade like this anymore. There's a way easier, much easier way to trade, right? But this should help you, okay? So watch this. All right, so once again, let's clean this up a little bit. Let's clean this up a little bit, all right? When you understand how to read this stuff, trading becomes way easier, okay? So the market broke, came down, tested this zone, right? Now, it didn't go straight up, but this is the 4-hour chart. I should have mentioned that. This is the 4-hour chart. So each of these candles is 4 hours. So I want you to understand that for 3-4 days, the market played in between these areas. Now, one of the things that I want to help you understand is, in order to be consistently profitable as a new trader, you should stay on the 4-hour chart, at the very least the 1-hour chart. You have no business on the 30-minute, the 15-minute, the 5-minute, the 3-minute, or the 1-minute. Many of you are losing because you're on the lower time frames, which moves a lot faster and it's a lot harder to read. Even though the market moves exactly the same in the same structure on every single time frame, for new traders, right, who usually lack patience and discipline, it's much easier to read the charts on a higher time frame, but it's a catch-22. As a new trader, you lack patience and discipline. So guess what? You're going to have to develop it. Because here's the mentality. As a new trader, you want to get into the market. You want to make money. You're anxious. You want to get in. You want to make money, right? That's what you want to trade for. But what you got to understand about this market is it doesn't care what you want, right? You're trying to trade. You are just a participant. So if the market says, hey, guess what? We're going to play around here for 4 days. You ain't got no choice but to wait, right? You have no choice. And the faster you start understanding that you're just a participant, the faster you start understanding and developing your patience and your discipline, the faster you're going to begin being a consistently profitable trader. So guess what? I suggest you trade the 4-hour chart and develop that patience and develop that discipline. Because guess what? If you trade the right way, you'll make money, which is the goal anyway, right? But anyway, so got to develop some patience and discipline. So this played around for 4 days before it finally broke the last high, right? And then came down for the retracement. We know that this was the previous resistance, right? We know that they're going to make people believe this is the support. And guess what? They're going to go hit everybody's stop loss that is uneducated, right? And they're going to go the direction they wanted to go in the first place. And then they do it again. New high, right? Boom. Do it again. And guess where the market retraced to? Not here, not even here. It threw a wick down into the last zone. Remember what I taught you guys. This right here is the buy zone. Okay, this whole area is the buy zone. Your stop loss should come below this area, right? Now, sometimes you'll get caught. It happens. If your stop loss was right here, right, you still would have got caught. So you want to put it deep below that last zone. Why? Because exactly what I said happened, right? This is what people are taught. The market broke. This is the area everybody was taught to look for the buy. And this is what the market always does. It doesn't always buy right here, right, and go up. It can come back to that last area of resistance, right? In this case, it went even deeper than that area of resistance. And anybody who had their stop loss right below that area also got kicked out the trade too. So you want to go deep into that zone with your stop loss below that area, okay? And guess what? And I need to say this. If you're trading without a stop loss, you're begging for your money to get taken. If you're not using a stop loss, right, because you are tired of getting knocked out of the market, then guess what? You're playing right into their hands. You're playing right into their hands. The stop loss is the only type of leverage that you have as a trader, okay? So you have to use a stop loss, okay? But it's all about stop loss placement. Where you put your stop loss matters. And then the lot size that you use matters, right? Don't over leverage. There's no need to, okay? Because there's abundance of money, abundance of trades in the market. There's no need to over leverage. Grow your account the way you're supposed to. But anyway, the market comes down here, right? Wicks. Now, this is a good spot to say this. Wicks matter. Wicks mean something. Wicks matter. Pay attention. Look for the wicks because they tell a story. They're telling you something. Same exact way you see the market threw a wick right here. What did it do a few hours later? Sent a wick right in the same exact area. All right? Wicks mean something, right? So from the time this wick got thrown, 2 days later, the market came right back to that same area. Right back to that same area. Wicks matter. It means something. Don't ignore it. Okay? And then the market goes up. All right? Still hasn't broken the previous high that we were just at. Okay? Still hasn't broken the previous high. Right? And I'm going to give you guys another tip to help you understand this even further. Because many people would believe, well, because it hasn't been back to that high, because it's struggling to get back to that high, then the market must be about to drop. It must be about to go into a downtrend. Still in the same trend. And I'm going to show you how to identify that, which is the whole point of making this video. But I'm doing market structure first, so when I show you how to identify the trend, everything makes sense. So just bear with me. All right, so anyway, what happens is the market finally, how long did it take? Since the market touched that area, it took 8 days for the market to return back to that area. It took 8 days of playing around in the zones previous, right? In the last, resistance areas and such. It took 8 days for the market to come back to that same area. And then finally it broke, created a new high, right? Created a new high, and then did the same exact thing again. And in this scenario, clean this up a little bit. Okay. So now, market comes, creates a new high. Boom. And let me clean this up a little bit too. Let's get rid of this. Let's keep that. Matter of fact, no, let's keep that there. Anyway. So, what's everybody taught? Right? Last area of resistance. It's going to create a support right here. We're going for a buy. Let's put our stop loss right here. And they got all kinds of taken out. Right? So, that's not your buy zone. So, no strategy is 100%. Right? The market does what it wants to do. This would have been our buy zone. Right? Would have been our buy zone. Stop loss would have been deep under that buy zone. And guess what the market did? Came and got our stop loss anyway. It happens. It happens. Right? But here's where trends come into play, and understanding trends, and then trends inside of trends. Okay? So the first trend that was developed was here. Right? If we be honest, it was here. Now, the thing about trend lines, right, is you have to be flexible. You got to be able to understand when a trend line is established doesn't necessarily mean that an engulfing candle breaking that trend line is a change of trend. That's another thing that many people are taught, and it's not correct. Okay? Just because an engulfing candle breaks a trend line does not mean it's a change of trend. It has to be a violent violation of a trend in order for the trend to actually be changed. And by violent break, here's what I mean. This was a trend, and there was an extremely violent movement, right? Extreme sellers moving the market down, right? And the buyers never recovered, right? So the sellers came, took control of the market, right? And kept moving it down, right? It was a violent break of the trend. Would you describe this as violent? No, because there was no continuation, no continuous movement to the downside. So it was not a break of the trend. It just means you need to adjust your trend line. Same thing here. It was not a violent break of the trend, right? It did not continue moving down. Guess what? It was not a change in trend. It just means you needed to adjust your trend line. Boom. Same thing here. This was not a violent move down, right? It moved down, tried to retrace up. Buyers are still trying to maintain control. It's not a violent break of the trend. Guess what? Just need to redraw your trend line. And if you extend it out far, remember how I told you guys that wicks matter? What do you got right here? Right? What do you got right here? Wicks matter. So if you would have drew this trend line, right? And let this be the extreme trend. This is the extreme trend. Overall big trend, right? As long as the market stayed above this yellow line, guess what? It was still in buyer's territory. And guess what? They came down and basically established that this trend is strong. Big rejection off of this zone. Remember, this trend line is still a zone. Big rejection, kept going up. Next time it came down, guess what? You should have been thinking, nope, I think this is a real strong trend because it just gave me a strong rejection, right? So I think this is going to continue going up, and you would have been right. So why does all of this matter? Because as you are establishing which direction you need to be trading, the only type of trades you need to be taking anywhere in this area are buys. That's the overall trend. You do not sell for any reason whatsoever in a buyer's market. You do not sell for any reason whatsoever inside of a buyer's market. So when you have a directional bias, you know the only type of trades that you are going to take, even if you lose some trades trying to catch buys, the only type of trade you're taking are buys, right? Because now you have a directional bias. And for eternity, this thing was buying. For eternity, seems like forever, this thing was buying. Okay? Forever. And so what I teach my students is, how many charts do you need to get rich? And the answer is 1. This is 179 days before this thing even remotely broke this trend line, right? The whole entire time it was moving up, okay? And guess what? Now this would constitute a real break. I would have been started looking for sells right here, right? But we'll get into that in a second. But anyway, same thing over here. Same thing over here. Okay, so let's talk about trends within trends, okay? Because this was a trend too. So it's a downtrend. But like I said, when we established that we're only looking for buys, we're not going to sell, right? Even though this scaled down for 12 full days, this was a 2-week descent within a major trend. And many traders would say, well, I could have been making money those whole 12 days. No, what you could have did was traded a different chart and stuck to your principles. See, if you're trying to be a professional trader and you don't have principles, then that's why you're losing. That's why you're losing. That's why you will be losing. Because you don't have any foundational principles that you do not break no matter what. And unless you establish some foundational principles that you will not break no matter what, you're going to be one of the traders around the world that's losing and giving people like me your money, right? The people who have discipline, the people who have foundational principles, the people who have established some rules they just will not break for any reason whatsoever, people who have discipline, we're going to be taking your money along with the big banks and everybody else you're trading with, right? So I do not break my foundational principles. Inside of an uptrend, I'm only buying, right? And inside of a downtrend, I'm only selling, right? But the overall trend is the uptrend. So during these 12 days, I would have found another pair on another chart inside of a trend that gives me the ability to trade in the overall direction of the market, right? And I keep an eye on GU over the course of those 12 days and find out when I can get my buy. Because like I said, if we understand that this was the buy zone, right? From this area, it retraced. What everybody else believes is this is the area to buy, okay? That would have been wrong. My stop loss would have been somewhere down here, okay? And guess what? My stop loss would have got hit. So obviously, right, they're not done moving the market down. And so since I know that they're not done moving the market down, I'm not looking to take buys right now. I'm going to wait. right? And then it scales all the way back. Of course, we wouldn't have known that trend line was coming back there. We got to draw it like we would see it in real time. This is the trend line that we would have established, right? This is the trend line we would have established. The market kept going down. So I'm trying to figure out, okay, is this a real sell or is something else going on, right? So even if, right, even if you would have bought into the fact that, okay, now we're in a different trend and this line wasn't here, right? Even if we would have bought into the fact that this was a different trend and we started putting our higher highs and different things like that, we might have been able to make money in those sells until we found out, oh, that's not real. That's not a real sell. Okay? So you might get fooled. It happens, right? But if you do, you just readjust, move your trend line back, and you keep on going with the trend. Don't get emotional about losses. You're going to lose sometimes, right? So with this understanding, we keep on going. All right, so now we finally get back to where we were. Market goes up, creates another high, right? Now watch this. Once the market came down, we recognize, oh, it's still an uptrend. It's still an uptrend. How can we play this? How would we be able to get into the market? Well, this was the low. This was the zone, okay, that the market created, and we can readjust this line because now we see that these wicks are coming down to this area. This is the new zone, okay? This would be the area where everybody would be looking to buy, right? I know that's not what I want to do. I'm going to make this, excuse me, my buy zone would be here. Okay, my stop loss would be somewhere down here. Now, if it left that area, right? If it left that area, and it's up here somewhere, then I also can use this trend line right here as a means to enter the market and still put my stop loss down here. Okay? So you got options for how to play it. Okay? So in that scenario, we are in the trade with profit, with the market moving in the right direction, right? Now, once again, the market comes here. It's the previous high. What's everybody taught? The market has to come back to this right here to get the buy. But we know that the market can come back to that last zone. So this is my real buy area. Okay, this is my real buy area. And the market did not come back down there, but my stop loss would go somewhere back here. Okay? And as you can see, it did not come back to that area. Why? Because remember, these wicks matter. It threw a wick here. We got some wicks down here. Let's move this for a second. Okay, so that's what it respected. It didn't have to, but that's what it chose to respect. That's what the market chose to respect. Okay, so in this scenario, we might have got left in the trade. It might not have been a trade that we would have been able to take. Okay, because the market just literally did not come back to our buy zone, which is fine. It left us. It happened. Never chase the market. Stick to your principles. Never chase the market. Came back up, created a new high. Right? Now, what do we know? Everybody's going to be looking to buy in this area. Right? So where's my real buy zone? My real buy zone is here. Where's my stop loss go? Below that last zone. And guess what? You'd have bought anywhere in this shaded area, you'd have been in profit, in a win, with the market never coming remotely close to your stop loss, right? This is how you trade. It's how you can get money out of the market when you understand what you're looking at. Let's go look for a downtrend. Let me show you a downtrend. It's the same thing. Okay? Same exact thing. So, first thing you want to do is establish that trend line. Draw this out, right? And of course, you wouldn't be able to see everything, but your first trend line would look something like this, based on this area right here. And then it would have violated it, you adjust, okay? Then it would look something like this, respecting this area, right? Came back, boom, boom. Even if I draw this out a little bit, market would have came up to this trend line. We can adjust it even more, just a little bit, okay? So this whole way down, you would have been adjusting your trend line a little bit as it keeps violating it, but you see it's still in a downtrend, okay? And this was the only area right here where it possibly could have changed into an uptrend, where we would redraw a new trend line, where we would draw the new trend line, because now we believe, oh, market wants to go up. And we start looking for buys. And guess what? We would have been wrong. Oh, snap. It's not really an uptrend yet. It's still in a downtrend. So guess what you do? Redraw your trend line. And readjust it again. The market stays below this line. Guess what? You're only looking for sells. And look how long you'd have been looking for sells. As long as the market stays below that yellow line that was established way back here, you still can be looking for sells. And how long is that? 206 days. The whole entire time, the only thing you're looking for are sells. The whole entire time. See how powerful it can be when you form a directional bias? You know which way you need to be trading. And you stick to those principles. Okay? So now that we have our directional bias, right? We stick to it. We do not change unless we are forced to change. Okay? Like we thought this was the change, but it really wasn't. And because we identify it wasn't, guess what? We just go right back to our directional bias of it being this sell. Okay? So, let's just work with this right here. Okay? Now, same principle as the uptrend, but in the opposite direction. Okay? Market goes down, comes back up, creates a high. So down, up, creates a high. Okay? Down, up, test that high. Okay? Come down, create a high here. Boom, comes down, right? Actually creates a high here. Comes all the way back to the last high, right? All the way back to the last high. So let's talk about this. So what happens is, let me make sure you can see it. The market came down. Market went up. Market came down. Market went up. Market came down. Market went up. Market came all the way down. Market went up. Tried to make people believe it was going down again, and then went back up. Right? The market can do that. Okay? So watch this. In the downward scenario, when the market comes here, this is where people will be looking for the sell, right? This is where people are taught to look for the sell, but what do we know? We know this whole zone is a sell zone, right? Now, didn't mean to do that. Now, what we know, the market left us. Well, not really. Well, it came back. Oh yeah, the market left us because once it threw that wick, it dropped, right? It dropped and then created a new zone here. So this right here, we wouldn't have made any money or lost any money if we just would have got left. Now, when the market came back here, now this is what everybody's taught the new sell area would be. Stop loss would go here. This is what everybody else would do, and they would lose money. But because of what we know that this entire zone right here is the sell zone. And we know that our stop loss is going to go somewhere in the middle of that last zone. Okay? So anywhere in this shaded area was your opportunity to take sells, right? And how long did it give you to recognize this? 6 days, a whole entire week to recognize that you could go ahead and take the market down, and guess what? You would have got that sell. You would have got the sell. Okay? And not to mention, if you wanted to stay in that sell, right? There's a lot of money to be made, right? And I'm going to make a video coming up about why it's easier to catch 100 pips than it is to catch 20 pips. I'm giving you guys some major training, some major value, right? So look out for that video, but you can pretty much see it right now while I'm explaining this. I'm still going to make the video, but you can see why I believe that it's easier to catch 100 pips than it is to catch 20. See, when you're trading the lower time frames, that's why you're having so much trouble. When you come up to the higher time frames, you just got to develop patience and allow the money to come to you. And if you develop that patience, you'll be fine as a trader. You'll be fine. It's just the fact that people are greedy and they don't have any patience or any discipline, right? They have no rules that they follow. They just want to make money. And those are the people who lose the most money, right? That just look at the market as, I just want to make money. I want to make money when I want to make money, not understanding that you have no control over that at all, right? So anyway, the market comes down, market throws a wick back up, okay? So now this becomes the new area where everybody's taught that they need to go ahead and sell, right? But we know between this is our sell area. This is our sell area right here. And we know we want to put our stop loss deep into that last area, right? And the market did what? Anybody who was looking for sells here, the market violated them, took their money, and dropped. Whereas you would have had your stop loss up here and been able to make money. And this happens over and over and over and over and over again, y'all. Right? Over and over again. I'll do it one more time, okay? One more time. So now, market comes here, market comes all the way down here, market comes back here. This is now our new high, where everybody is taught, hey, sell here, okay? What are we gonna do? We're gonna look for the sells in this zone right here, okay? Which is a little bit closer to this, right? So whenever I get a situation like this where two of these lines are close to each other, I'll remove the last one and just use this one and use that right there as my last previous high. Okay, so what I'm going to do, put my stop loss up here, right in the middle of that area. My entry zone is here, right? And what do? We got close to our trend line again, which I love, right? Because when we're in a trend and we get that close to the trend line, the trend zone, I should call it, right? Makes for a great opportunity. Great opportunity, okay? But so the market, everybody's looking for their sell here, right? In this scenario, they would have got it. But how long did it take for this to actually go down? Once again, 7 to 10 days of playing around before the market actually dropped. So like I said, patience, patience, patience. That's it. That's all you need is patience. A week of playing around before the market actually did what it was going to do in the first place. And when it did, 235 pips down to the downside, 235 pips in profit, I should say, to the downside in that sell, right? This happens over and over and over again. Like I said, sometimes you'll get fooled. This is a break, right, of the trend line, and now you believe that it's a buy. So what do? Create a new trend line, right? And then you start looking for buys. But then you realize you might get caught in a buy where market actually breaks that trend line and keeps crashing down. Then you quickly realize, oh, it's not actually in buyer's territory anymore. They just fooled me. It's okay. Readjust your trend line and keep on going for those sells. It happens. And when it happens, don't take it personal, right? Just understand I got to readjust my trend line and keep doing what I was doing in the first place, right? So, some final thoughts. Okay. Hope you guys got some value. Well, I know you guys got some value from this, but I'm going to give you guys some final thoughts. Okay. First thing, right? The most undervalued, extremely undervalued skill when it comes to trading is identifying a trend. Get good at identifying a trend. And when you get good at identifying a trend, stick with that trend. Trade in that direction. Number two, one of the things that's going to help you be successful is developing a pip target. Develop a pip target and that you're going to stick with, like 50 pips, 60 pips. Now, of course, I'm showing you trades where it's 200, 300 pips. I get it, but the goal is to grow your account. So don't get in infinity mode where you're always looking, for I can get more out of this trade. I can get more out of this trade. I can get more out of this trade. No, you need to take profit and you need to get out of the market. You need to get your money, right? And then understand that there's always another trade for you to take, especially when you're trading in the trend. There's no need to be greedy. Grow your account, right? Number three, stay away from aggressive pairs like indices, like US 30, right? Stay away from NAS 100. Stay away from GR 30. Stay away from indices altogether. Stay away from metals like gold and silver until you are consistently profitable, until you have a sizable account to where you can afford to trade those things. Like I said, you don't want to be trading on a 3-minute, 5-minute, 1-minute, 15-minute chart, any 30-minute, all those charts, leave them alone. Go to the 4-hour chart and become consistently profitable, okay? That's what you want to do. Number four, stay on a higher time frame so the market is easier for you to read. Just said that. Number five, wicks are clues in the market. Look for them. Look for the wicks. Use them. Now, like I said at the beginning of this video, there's a much easier, way easier way to trade, right? Way easier. And if you want information about how my personal coaching program works, right, go ahead and go to my free Facebook group, increasenow.info. I want you to go in that group and watch a 12-minute video in the announcement section of that group, It shows you about how my coaching program works with my wife, and you can actually see other people that we have coached and taught my personal trading strategies, and they're having phenomenal results, people all over the world, right? Now, if you understood what I just showed you, naked, on the charts, naked, no indices, no indicators of anything at all, if that was simple enough for you to understand, right? I want you to understand that that's the hard stuff. What I just taught you in this video is probably easier than anything you've ever learned up to this point. And that, to me, is the hard stuff. I have something so much easier for you that will literally help you identify trades within seconds of pulling up a chart. Within seconds of pulling up a chart, you'll know if you have a trade that you can take or not, literally in less than 5 seconds after reading the chart. That's how simple that I've been blessed to be able to teach and help people understand trading, right? So definitely like this video, share this with people that you love, that you care about. Definitely go ahead and subscribe to this channel, okay? And like I said, check out the description box. I got a lot of great information in that description box. I got other videos that you would definitely find valuable, and I just want to help. I want to help as many people as possible. My wife and I, we have the heart to see people win in this industry. It's not as hard as people make it seem. You just need to be taught in the right manner, right? I want you to really think about this. The masses are all trading with the same information, right? And I thank Jesus, I thank God that He leads me and guides me on these charts and shows me things that other people don't recognize and they don't understand, right? And I'm able to simplify it, make it easy, and help people all over the world make money. So listen, trust me. Go to that Facebook group, increasenow.info, right? Add yourself into the group. Make sure you put myself or my wife as the person who added you in. Follow us on social media. We're accessible. I'm going to give you several different ways to contact us, right? And it will be my pleasure to serve you, work with you, and help you change your life through the skill set of trading. And like I always say, I know if I can help you change your perspective, I can help you change your life. Until next time. What has been your biggest day trading thus far?
Man, my biggest day trading so far has been a little over $2,400, man, in a day.
Went from about $1,000 to about $5,800 in 2 days. And then this most recent one I got right now started at $565, and right now we're at about $4,500.
I flipped 400 to $2,200. Put it like that.
Jeez.
In a couple hours.
My biggest trading week was 17,000 US dollars.
How long did it take to make that?
3 days.
My biggest day trading actually was last week. I put up over $1,100 in one day, and the week I ended off with about $1,500.
Tell me what your first impressions were from when you did the training, when you first learned Skittles.
Well, like when I first learned it, I had to keep looking at it. I was like, no, this is just too simple. This is like, again, just talking to myself, like, okay, because I'm already like not really like computer savvy. So once I got to the Skittles strategy, the first video, I'm like, oh wait, I gotta take notes for this. I was like, no way, this is easy. But like at the end of it, I was just like, all right, like this is all I have to do. Now I get what Salida was saying, 1, 2, 3, take the trade.
You just saw the amazing results, ladies and gentlemen. I'm looking for more people around the world to serve. It doesn't matter where you are. I'm looking for people to help become successful through the reality of making money from a phone and making money while you sleep. And I got some tags on the screen right now, multiple ways to contact me. If you reach out, I'll be willing to show you exactly how this works. I'll be willing to accept you into my private community, and I'm going to serve you and teach you how to multiply money from your phone exactly like you saw the results of the other people just a moment ago. So ladies and gentlemen, I can't wait to serve you. I'm accessible. You can check my Instagram stories, my YouTube stories, and you'll see when my next live presentation will be. I want you to come hear it for yourself. Ladies and gentlemen, one message can change everything. Can't wait to talk to you and help you understand how you can change your life. Talk to you soon.